I know this is a nice chart. I'm out here with Ralph Akampura's barn chart of the Dow Jones Industrial Average. But guess what? I got some nice charts too, starting now. Good day, everybody. It's Greg Schnell, and I am here with the weekly market review. Thanks for taking the time to join me. Lots to talk about this week with the interesting market we had. We started off with the Saudi oil strike. We ended up with the quadruple witching on Friday, and in the middle we tucked in a Fed meeting. So lots going on in the charts. Let's jump into it. So to find my blogs, StockCharts.com, articles tab, drop down menu on the right, and you'll find the Canadian Technician, Don't Ignore This Chart, and Chart Watchers. And please hit subscribe at the bottom if you're interested. For contact information, you can reach me at gregs@StockCharts.com, Twitter at Schnell Investor, and I've also got a website starting up here, gregschnell.com, and feel free to go there, put your name on the email list, and as I start to come out with new offerings, you'll be able to catch those there. Okay, so for the agenda this week, China negotiators go home early. This was a big part of my thrust, and that China was going to get things worked out with the U.S. And lots of the charts reversed on the news when they went home, or were reversing through the week, I guess. And when they went home, it kind of confirmed everything. So that was a big problem for me. So I'm really not comfortable with the way this worked out. Next we have lots of failed breakouts, but the bigger deal was the industrial commodities drop. Everything that had broken out last week all failed on the news, so lots of uncomfortability on my behalf. Oil stocks run on the back of the attacks, but they closed near their lows of the week, but they were still up on the week. So and now on Friday after the market closed, the U.S. announced that they were going to move military hardware into Saudi Arabia to protect the oil facilities there. Might be a little something else going on. Anyway, gold was breaking down with bonds and the yen, but they started to improve towards the end of the week. So I worded it like this because this is what I had last week. But what I want to discuss is the potential for that to turn higher here. Anyway, it did turn higher on Friday, and some of the gold charts actually started to signal some nice stuff. So that's kind of the issues I've got. Though that was working, but all of the industrial breakout had an inside week and pulled back. Looks like a fail. The banks, some of the banks broke out, like JP Morgan, and is still holding up, but other banks, the index rolled back over. Semiconductors look like a failed breakout. Trucking looks like a failed breakout. Rails had started to outperform on relative strength and immediately pulled back this week from an important support and resistance line. So lots of damage in the market. And I do want to highlight just how difficult the market is here. Perhaps I should just go get a different chart to do that. Let me go get the SPX, and and what I want to show you on here is just on a weekly chart. If you look at the PPO, one of the things you see is these relatively smooth waves on and on and on. And what we've had now is literally up, down, up, down, up, all within like a 5-month period. So or 6-month period. We have been wobbling all over the place, and that indecision is starting to play out in the market. Back in 2014-15, we kind of had this slow downtrend going here where the market wasn't doing anything either, but it was relatively stable. And then we had two big wild swings and then bottomed and headed up. Well, here we're not having any of that. We just keep oscillating, and we haven't been able to pick a direction. Unfortunately, one of the directions is a lower low. And when I go to the Nasdaq 100, what we see here is we made lower highs and lower lows, so that's a bit concerning. And I'll show you some of the other charts in there. But the one thing that we saw this back in 2016 where the Nasdaq basically underperformed into July and then took off and ran up. So just because the Nasdaq has underperformed lately isn't that big a deal. It can do that. What I don't want to see is this big long trend line that goes on for 4 years of the Nasdaq outperformance start to break. And unfortunately, we're sitting on that trend line this week. So again, lots of technical damage. I'm going to go really fast because I want to cover off the breadth and what happened here. So we had this spike in breadth that got way up to 600 on the Nasdaq. This looks like a bull thrust from early 2019. If I unwind this tape, just take it back, 10 years, there are very few periods where we have a spike that high that we immediately fail. And so really concerning that, as we're trying to get going here, like this as an example, was a really good spike and it went on for another couple of months before the market actually started to top out. This one in here, this was the July spike in 2011, and it basically went straight up and pulled straight back. Well, this is what we've got going on here, and it's really quite extraordinary. So just to point out how difficult it is, there is one in here, right in here, that's a little bit similar, but it was quite wide actually. So it's not, I don't think it's the same sort of thing, but the concern I have obviously is if this is going to roll over and these charts, these lines move because I've got multiple versions of the NAAD on here showing, so because I've changed the chart length, now all of a sudden the lines move. But the one thing I want to show is back here in 2014-15, we had a bit of a downtrend. Then we went sideways for a while and couldn't break out. And that final clue there when we started to break down was a big issue. Well, here we are, and we've had a lot more chop. It's been a lot more difficult to call. But again, once again, we failed right here trying to get through this level. And so all of these things start to really make it more difficult for us to figure out which way the market wants to go here. But again, straight up and straight down here in terms of sentiment, and that to me is a big difficulty. So watching closely, but one of the big concerns I have, we had broken this downtrend line, so that was good. We had this big thrust that looked like the start of a new bull market running. And as we were trying to go through new highs, so it looked like we had lots of jam. And then what did we do all week? Nothing. And on the Chart Watchers article from yesterday, I mentioned that 4 out of 6 of the last days here on the S&P 500 actually had down closes, including the previous Friday. So really not a good setup as we come through a difficult week. Now, it was a difficult week, so maybe we can bounce out of here. But I would just suggest that we're going to need to keep our stops very tight here, because we are still in a situation, as I mentioned on the Market Buzz on Friday, we have the stock market trying to break through prior highs. We have all of the kind of a pullback and everything like we had back in 2007, and I'm not expecting a 2007-2008 decline. But we have the same sort of timing setup where we hit a high in July, we pull back through August, we rally back out into September, and then October 9th, the stock market actually topped as we headed into the earnings season. That's what we've got going on now. We've seen the same thing. Now, why is that? Why do I pick that time frame? Well, that's also when the Fed started to cut last time. The Fed actually didn't start cutting in July, they started to cut in September. And in October, they said, this is our second cut. We don't see doing another one. And then by the end of December, or by the December cut, they were doing 50 basis points, and they went over and over and over and over. And Bear Stearns failed in May. So it wasn't like these banks had started to fail and that's really what showed up. It was exactly the opposite, where the Fed had started to see problems, was starting to ease, but all of a sudden, things got worse. And so one of the critical things I think has been, we've been hanging on this trade issue, and we went for a 3-week or 4-week period where we had no tweets about China in a negative sort of tone. And then this week, all of a sudden, they started to fire back up again, where we could raise tariffs to 100%. And so that should have told us maybe that the trade discussions were breaking down. But what it did, when the Chinese deputy negotiators went home this week early. I think that's signaling a bigger problem that this isn't going to get resolved right here in the fall. And that would really be a big nail in the coffin for me. So watching very closely here, you can see the market sitting up here with this topping structure and very, very difficult to get through. And on this most recent thrust on the NAHL, we've been making lower highs as we do this. So you get lower highs as we go, and then back here on the the number of stocks that have made new 52-week highs compared to lows. Once again, we didn't break out, and it looked like we were going to be able to do that. So lots of concern. Here's the NYAD. And we just went flat all week on that index, but we had this nice big mountain, better than the only other one that was bigger was this one right in here for the original surge off the 2019 low. And yet, what did we do? We immediately give it all back. And when we go look at the the new high lows for the New York Composite, what we see here is we're at 76. And again, we started to thrust up. This looked pretty good. And now what's happening? We just don't have that much jam. And on the doing it as an area chart up here, just doesn't have the same sort of moxie that we want. And so, that 2019 startup was pretty big and pretty wide. That was good. Then we had a nice surge in July, but this surge was a lot less now all of a sudden. So very mixed pictures, and this is the one that concerns me the most. Here's the S&P 500 advanced decline percentage. Again, a chart from Arthur Hill. And look at this big mountain straight up and then literally straight down, every day declining for the last 6 days or whatever. This is an 11 period moving average. So we went straight up and straight down here. And the problem with the straight down again is we're already in negative territory here. And again, I go back and try to look and find something, that is run for a month like that. There wasn't really anything. So really concerning that as we got to the prior high, we stalled. I'd encourage you to read the Chart Watchers article that I wrote on the weekend because it shows 3 specific charts about the S&P 500 and how concerning it is. Now, here's one of the indexes. The Canadian market has literally rocking out of this base here where it had consolidated all through May, June, July, August, and then it breaks out to a new all-time high. Really nice to see. France also broke out to a new all-time high. And then what happened is, look at this advanced decline line. Even with all the oil stocks having a sudden surge on the back of the Saudi attack, we still didn't get any breakout in advanced decline. And I would have expected some sort of mountain to show up that we would get it. Now we're sitting right on this trend line, and I've used this hump and this hump to kind of guide where the line goes, but obviously there's a peak sitting here. I could have put it on. The issue I would say here is we're very close to not having enough momentum to get out of here. So I think I mentioned it last week that it's a really tough place for us to stall. So we want to see everything kind of continue to go on. And what happened was we stalled. So that's a big hurdle for me. Looking at the high-low, the number of stocks that made new highs compared to new lows still didn't break out in Canada, even with the oil price move and all of the oil stocks following along. Okay, here is the Alexander Elder high-low 5, and you can see we're at 540, but again, the smallest bump here doesn't compare with the June, July, August, and smaller than we got up to in late February. So once again, a little wimpy, and so that's kind of my concern, and as we were trying to go through the prior high, that's a problem. Okay, McClellan oscillator back down near zero. The Summation index got up to the previous high. Again, these waves have been extreme, right? This has been 10% swings both ways, 12,250 to 13,350 kind of thing. So just you're seeing these big swings, and the problem with these big swings is, they get us into the market and out of the market, and they're really jerking us around, making it more difficult to find trend. on the New York Summation Index, looking back over a long period of time, we're back up to this 800 level, which is bullish, and the candle was still quite strong this week. But we saw this in July too, where we kind of got up to this level and literally turned right back over. So I'm not very happy. On the 60-minute chart, the PPO is back at 0 and closed negative actually on the Friday on the last bar. So lots to be worried about. I would just say keep your stops tight, and if it kicks you out, take the profits you might have made bouncing off these lows, but try to avoid. We're in a very fragile place. Okay, the Nasdaq Summation Index at the 200 level here, very concerning, or very bullish, but concerning because we are losing momentum already on that. Now, I wrote on this on Thursday. This chart worries me because the other data is so bullish. We have this downtrend in momentum. And again, we see this over here in 2015, and then that's when we fell apart. We had the same thing coming into the October the September high as we went down into October. And you can see we just have never had enough momentum get going. So one of the things I was hoping for after I saw this down and back up again was this was going to get us going. And we actually made higher highs last week on the percentage of stocks above the 200-day moving average. So it looked like we were starting to move up again. No, wrong. This week we started to retreat again. So lots of indecision, really difficult here. Looking at the Nasdaq 100, again, only at 66% and 72%, so not quite as rosy as we'd like it. At least it's up above 2/3, but we want to. In July, this got all the way up to 80%. Here we are at 66 and struggling to get through the prior high, so that's concerning. New York Composite, that same sort of downslope, and it's at 55% here. If this is going to roll over at 55%, this is the kind of places where we see big damage happen. So want to stay focused on this. This is a grinding market, and if we don't get the breakouts, it's really important that we stay flexible. So as much as I don't like waffling back and forth month in and month out, that's what the market's giving us with these big moves. And what looked like, this is a typical bounce level going all the way across on the S&P 500. But we're also on a lower high, or a high, a lower high, and if we roll over here, another lower high, and once again we started to pull back already on the percentage of stocks above the 200-day moving average. So really not a great week for a whole bunch of reasons. Toronto Stock Exchange, look at this. We finally got above this red line for the first time since early 2017. You would think that would be so bullish, and it is. The chart is breaking out clear to the upside, but again, that advanced decline line in a worrying position. So lots of things to focus on. We're going to soar through the indexes here really quick. This was quadruple witching day. Extremely high volume, over 3.25 billion shares. If you look back, the last time we had one like that was last September, and that ended up marking kind of the top as we went into the volume slide there. So watching closely, the one in June was also a 3 billion share day, but it rolled over for a week as we were trying to break through prior highs and then took off. So I will just say the charts look a lot more tepid to me, and this looks a lot like a topping structure. So careful. This was the Fed meetings, and you can see, so Fed interest rate colored red, decline colored red, another interest rate colored red, and we've been holding up here for 6 days trying to get through this top. We sat up here for 3 weeks, so it was kind of disturbing that it took that long, and then we finally broke down on the Fed meeting. Tried to rally, got a rally going here for the last month, and now stalled at that same sort of level of where the Fed was meeting last time, and rolled down, and it looks to me like it's a problem. So anyway, we'll see if we start to get a put call spike here. Now, the one thing I would say on the Market Buzz show I did on Friday, I mentioned how similar the charts are from 2007 to now, just in terms of market setup structure heading into the fourth quarter. The one thing that I would really I know I've been concerned about the market continuing to roll over for literally 3 or 4 months now. We continue to have this PPO below zero, and if we roll over here, and again, this is bullish that it went above. The problem is it went above, and look at the candle we got this week. Made a new high, closed near the bottom of the bar, and closed lower. So nothing bullish about that. And our relative strength trend line, the big trend didn't break. We broke kind of the 5-month downtrend just last week, and then all of a sudden we slam it and hit up against this other line. And if the Russell's going to continue to underperform, that would be a problem. There is a horizontal line I'll show you on my next chart. But as these as we're waffling at zero here, it's made it very difficult to pick the direction of the market. And we can still make money on these rallies, but if it's going to roll over again and get weaker and weaker and weaker, eventually this whole thing kind of has to do a flush to really rejuvenate and get more people on board with the actual direction. So going back to the S&P, this is kind of what the last month looked like. We had a nice big uptrend going, and we clearly, broken that trend line, just rolling down here. We're up 2% from this August 23rd low. And if we go over here, so on this gain here, we were minus 2.6%, up 2.3%. So this is roughly a 6% swing. And if we look at the year-to-date performance, what we see here is, coming back to the big low in December, pop down, and then a huge run, and then a pullback, huge run, smaller pull back, chop, try to go up and can't get through this prior high. So this level right in around, I'll call it the August base, slightly above the August base, goes back in importance into 2018. You can see why this line is here. And so we tried to bounce here. I've drawn this line in here, which ignores the spike down in June, and one of the reasons I did it, because I have 1 point here, 1 point here, and really 3 points right in here that are very similar. So this seems like an anomaly to me, but this trend line here with 5 points, if I put it down here, it's 2 points. I would just say that, if we don't get through this high here, this is a really important place to be focused. And again, lots of industry and sector groups failed their breakouts. In terms of just looking at the three markets together, we had a doji on the S&P 500 this week. The Nasdaq, same thing. Inside bar, not that great. On the Russell, we actually made a higher high and a higher low, but closed at the lower end of the bar. And this is that horizontal line for the Russell, the horizontal line for the Nasdaq, and the horizontal line for the S&P 500. All of them don't look very comfortable, that we basically got up and stalled right away again. And that's what happened back in here in that July timeframe. So here's the S&P on the daily, and I think this downsloping trend line here on the PPO momentum is getting more and more important. We have a high, a higher high, and going on to a higher high here. This is a bigger problem, and I'd like to, when you get lower momentum and higher peaks, that's an issue. This peak here hasn't quite been able to take out the other one, and that's one of the reasons we want to watch. Remember, in September, October, we basically got through that prior peak, spent another month going higher, but then we jogged sideways for a couple of weeks, and then it literally just let go. So I'm very concerned here because we have a lot of that sort of sentiment building up. Don't remember what's on this particular chart. Yeah, just this relative strength trend line for the Nasdaq going back 3 months looks like it's in jeopardy of breaking. And on the Nasdaq, we have a much more defined PPO downtrend. And what I'm worried about, obviously, this peak is barely above zero. So rolling over again, we look over here on the left, and we see this kind of dipping below zero and then just running out of momentum. Well, while it ran out of momentum, this had some more power to break through the prior highs. This doesn't seem to have the same. Look at the chop in here, and as we go up here, it just doesn't seem to be this is a trend. This seems to be just chopping. So I'm much more concerned that this chop isn't really what we want. And the data out of FedEx even got Jim Cramer bearish, which is almost impossible to do. And in contrast to that, the Citigroup Surprise Index finally broke above zero and looks like it's actually turning bullish. So lots of mixed messages. Here's the Nasdaq 100, and you can see this long trend line that I don't want to see break. We're right on it, so it doesn't matter how we shape it. It's concerning. And again, we're trying to stay up here around this 7,800, here 77, 7,850. We're at 7,823, so we're below the April high now. We closed below the April high, and we're still slightly above the October high. But this defined uptrend goes back almost 10 months already. It's amazing how fast the days go by. I guess it would be 9 months. And so we're sitting right here watching very closely, but this lower highs in momentum, lower lows in momentum, all starting to get concerning. And the on-balance volume, these things still look bullish, but as you can see, the on-balance volume is starting to drift lower as well. So nothing that bullish about that. We actually made a lower low here in August, and then if this is our final high, a lower high here. So definitely, the setup is here for things to get weak quickly. What the real good news was is everything was turning up, and PPOs were starting to cross on the S&P, the MACD, or the Russell and everything else, and then all of a sudden they just stalled. So continuing to hunt here. Here's the New York Composite, and once again we're back up here. Last 3 of the 4 months had closed at this same level. Then in August we closed down, and now it looks like September is going to close right up around that same level again. So really a big barrier for us to get through here as we try to work through heading into earnings season. And I think if we'd have had good news on the trade front, that probably would have helped spur things. But we're going to get a lot of PMI numbers in the next week or the week after, and as those start to come out, if they're very weak and we haven't got any sort of trade deal, I think we could really compress this market. Okay, Russell trying to hold this horizontal level called 1475, and we just keep stalling up in this other range. PPO right at zero. I mentioned it a few times, and so we rolled over, got some rally again. Hopefully I made a little bit of money on the rally, but be careful here because we got our PPO cross, but again we had a very poor close where we closed near the bottom of the bar, and it looks pretty much like a reversal. Okay, I'm going to run forward. TSX just shot up here, so this all looks very bullish. Fully agree. I mean, I would expect this to be one of these, right, where it just keeps going and we get another couple of months out of it, but that is not the kind of price action we had. I think if the oil stocks rally again next week, we'll probably get more action on the TSX, but really not that great. Okay, looking at this PPO, it broke the trend line up again, so that's bullish, but we were making lower highs, lower lows, and so now we need to make a higher high. We have to get back above this June, July period in here. If this is going to roll over, we'd see problems. So we want to just keep watching that and make ourselves aware. This XVG chart, look at how it chopped back in 2000, 2001. And then look at what we've gone through here. Same sort of chop back and forth above and below this moving average line. The 40-week moving average actually turned back up again in here for the first time this year, I think. Anyway, it was trying to get going, and now all of a sudden it looks like it's rolling down. So I actually have faded out where I wrote in market top because I thought we were going to go on to make new highs this week, and sure enough, we haven't. We got stalled. So this could still be the market top. And again, the MACD has turned back up on this chart. And you can see, look in 2000, 2001, how often it just came up to that zero line and failed. And we seem to be turning back up here. So anyway, next week is very questionable for me. I feel like it just didn't go well. This is another chart that scared me. We had the Chinese market turning up higher, PPO bouncing off zero, everything running. And what do? We get to resistance, and we have a big outside bar and close in the middle, which was better. For a while there, it looked like we were going to close at the bottom of the bar, and that would be a full-blown outside reversal. So watching for that. But again, if this Shanghai comes down, bounces off zero, and then just makes a very little bounce and fails, I mean, that's kind of what happened back here in early 2018, and again, same sort of thing around the tariffs. So if this is going to start bombing out, we should see it right here. So that'll be an important chart to watch in the coming 2 weeks. Nikkei. I found this really interesting. All of a sudden we had this downtrend in the Nikkei. I thought it was starting to be bullish here. And then I looked back in September, and all of a sudden the Nikkei broke this downtrend and went on a sudden shoot up for 2 weeks. In the meantime, while it outperformed, what happened? All of a sudden that kind of marked our final top, even on the S&P, and down we went. This basic same pattern was what we saw in the S&P. Here we are with the Nikkei up at prior resistance, and it stalled there. We had an inside day on Friday. But again, this breakout in relative strength, very odd. So the highest momentum, like there's all kinds of reasons to be bullish here with lots of momentum and everything happening, but we're just, the way the charts changed by Friday was stunning. Bullish wedge still building on the currencies. There's not a lot in the currencies other than the emerging market currency, so I want to just skip down to that so I get some time on other stuff. EEM did not break out, which is, it looked clearly like it was going to do that. And then look at the price bar we got here. We had a push up, and then we had a lower open, a lower close, and we broke last week's bar. So to me, this looks like it's fully reversed. We're going back down again. Copper had a terrible week on the news that the China negotiations didn't go well. And look at the PPO turning over just while it's under zero. So lots of reasons to not like the emerging market breakout. So I was just starting to, literally on Thursday afternoon, I'm still happy with the emerging market, and we end up just all breaking down. So nothing good there. Here is the HYG, and this particular chart suggests being bullish. Big breakout here. This goes back a year and 6, so call it 18 months, and breaking out to a new high. And if risk is rising, so is this. So people should be getting bullish. I keep checking the date, is it right? But as you can see, we're making lower highs and lower lows in momentum here. So if this rolls over after being just above zero, that's the kind of thing we saw in 2014-15. So keep watching that one. But it did give us some clues. Now, let's go to TLT. It put in a big bounce this week, more than I expected. So we have an uptrend here on the weekly chart, and it's still continuing to go up around 4%, which is pretty high. It looked very similar to this price action up here. So we'll see how far this bounce goes, but I actually think the move in the bonds is over or exhausted for now. My BlackRock municipal bond fund that I like to use to help me with direction on the yield, it has actually broken its trend line, and this pulled back, and so obviously we had a little bounce this week, but we did get a sell signal on the PPO at a high level. It could stay up here for a while, kind of jogging sideways for a quarter or something like that. But it looks to me like the upward momentum is broken on the relative strength here. So we're starting to pull back. So I feel like the top is in on the bond prices, on the bond yield lows. And this looks like tweezer bars to me, reversals that are starting to head higher. Perhaps I'm wrong. So the TNX, last week I wrote on here, Jamie Dimon says they are prepared for negative rates, and so things shot up. And then this week we had an inside bar and closed near the low, so perhaps this is going back down again. But definitely lots of volatility with that big 10% reversal bar last week. FVX just got to its trend line and failed. It looked like it was going to go flying through it, and it ended up pulling right back. So okay, I'm gonna go one more chart in here for the 2-year. Let me just find it. Not that one, no, not that one, this one. What I want to show here is that the last 2 stock market tops were when this PPO cycled below zero, and I wrote this a couple weeks ago, and we're sitting just above zero. But it doesn't look like the decline is increasing in speed. It looks like it's decreasing in speed. So I wonder. But anyway, we're watching right now based on this chart, which is monthly. This would be the highest month-end close on the S&P 500, so it would still look like the market top on a monthly chart, like we made higher closing highs on the monthly chart. So that's pretty interesting. But again, just feels like we're struggling to break out through the top of that range. Look at this 3-month. This thing just really broke down hard. The last 3 days was just an acceleration lower. So yeah, lots of changes there. I guess that was since the Fed meeting. Okay, we don't have time to go through them all, so we're going to quickly run down to the transports. They had a terrible week. They basically spent the whole week going lower. They got to this trend line on relative strength and failed again. You could just see how oscillating this has been. It's been a, trader's market if you're trading the transportation index or industries. Terribly choppy and no real progress. Got up, broke through the prior high. That looks bullish. New 3-month highs on the transports, rolled over the next day. Just literally tempting and breaking out. And what we saw here was a big push last week, which was very bullish. This week, an immediate reversal of that and closed near the lows. Not quite on the lows, but pretty close. So this is an inside week because lower high and a higher low, but we weren't able to break above zero so far yet on the PPO. If we roll over here, that'd be a pretty good clue to be very, very cautious. That's the kind of thing we saw back in 2015 rolling over. So I want to keep watching that kind of thing. Looking at the airline stocks, just chopping sideways, nothing really there. They had an inside week as well, trying to bounce. But if it rolls over at this 50 on the full stochastic, that's terrible. PPO right at zero. It's been a terrible trade for 3 years, so probably just want to avoid that industry anyway. Railroads, starting to break out on relative strength. This is very bullish. What does it do? It gets literally to this trend line, spends 1 day above it last week, and reverses and comes down all week. So just a very failed breakout. And relative strength rolled over again already. Didn't just stay in line, it actually rolled over and went lower. Friday closed down 1.16%. I want the railroads to be strong. So if this is going to be a problem, if the railroads are going to roll over and go negative here, that is a big deal to me. And again, we've broken this big 2-year uptrend in relative strength. Looking at the weekly chart, we're right at zero. So if we're going to fail here, that's the kind of thing we see in bear markets. It gets to zero, tries to bounce, can't, fails, and rolls down. Very concerning that the railroads had a lousy week. And I think on the back of the Fed news, most of the transportation did. FedEx news. Trucking had broke out to new 52-week highs, or whatever, 11-month highs. So we were right there. And then here's what happened. We break out, and what's the first thing we do? We pull right back, and not a very bullish candle. This, to me, at least we're still holding above the pullback level or the support resistance level. But this is a terrible bar that we got. So we had a nice bullish week, and then we couldn't add on to it. And if anything, the momentum was killed and we closed near the low. So pretty difficult. We still have an uptrend in relative strength going here for the last 3 or 4 months. I wouldn't want to see that broken, and we're going to find out in the next week or two if that cracks. So if you think I'm changing my mind, I absolutely am following the market. So if the market's telling me to change, I will. And as I mentioned early on, the wild swings we've had are quite odd looking back at history, but we're definitely in a choppy cycle here. So here's the broker dealers. They look like they were breaking above. They broke above the July high, hadn't quite taken out the May high. If they would have, it would have been a new 52-week high. They stalled right there and immediately rolled over and had an inside week. PPO right at, you guessed it, zero, so no real momentum there. If it rolls down, that would be very problematic. Utilities had a big week. So that almost confirms kind of all of the breakdowns in these others. We had new 52-week highs in industrials, and so we also had a big move in industrial metals, which all looked good. And then we immediately gave it up, rolled back over, had an inside week, over and over and over, failed tops, inside weeks. Inside weeks just mean indecision, but we fell back below the support resistance level. This looks bearish to me. We've got lower highs, lower lows on momentum, so that's a problem. Okay, Semiconductors. Every time I'm shaking my head on these. So semiconductors relative strength was kind of trying to improve here. There's a bit of a downtrend, briefly poked up, pulled back. Now we've got an uptrend of 3 or 4 months here that we want to watch. We also saw that same sort of an uptrend in the April-May period. And then back here we had a much longer uptrend that started to break in that September timeframe. So we have that long bar chart here. We'll watch what the price does, but I'm not very happy that this failed. So we have higher highs in price and we have lower highs in momentum. This is not a good recipe for going higher. Anyway, very concerning. This didn't quite give us a sell signal on Friday, but was very close to it. Okay, getting straight into the commodities, lots to cover. Here is the CRB, and what we see here, it tried to get back up through this red resistance line and settled in the middle of the area. This downtrend line is now in play here, so if oil pops again, I think we go through this red downtrend, and that would mark some pretty bullish time frames for commodities. But I think it's really all on the back of the Saudi attack, and I'll probably add that onto this price bar. But you can see lower highs, lower lows, and momentum, but we did get a positive cross. Looked like everything was going to break out, and again, the next thing that happens is China walks out of the meeting or whatever. They couldn't come to an agreement. So here's West Texas, pulling down since last October. 1 year later, it's starting to break out. Everything sounds good on that. Starts to head higher. Natural gas had a bit of a weaker week. Looking in on heating oil and gasoline, broke out to the upside, very bullish. Gasoline definitely shot up. So all of this looks pretty good. Then we get over into corn, soybean, and wheat. Corn was sideways, soybean and wheat was sideways, soybean were down. Nothing really there. I'm going to skip over most of the grains, but here's gold. Look at this big bullish push here right off, coming back to the 10-week moving average and looking like it wants to bounce and go higher. Silver got to resistance, pulled back, and looks like it wants to turn higher. So there could be some trades in that particular sector. Copper drives me crazy. It broke through this downsloping trend line after 6 months. That was very bullish, and then immediately gave it back and closed below the 10-week. Aluminum actually closed up compared to its 10-week this week, but what we were liking about copper was it went through this 3-year trend line, fell below, took off, got back above it, and literally, I think I spoke on Tuesday and it was still above it and holding up, and then all of a sudden by Friday we closed below the 10-week, below the trend line, everything failing. So just crazy how quick it changed. Gonna just roll through these. Marijuana stocks continue to sell. They made new lower lows this week, lower closing lows this week. So nothing really working in that space. There are a few names that are trying to pop up, but again, the big downtrend appears to be down still. Coal, failed breakout. Steel, failed breakout. Everything looks so bullish, back above support resistance level, taking off to the upside. Just amazing how quick it all gave it back on the news that no trade deal was coming. Lithium and Remix, they're still holding above the 10-week on lithium and on REMX, or the rare earth metals ETF, back below the 10-week. So again, nice big bullish push 2 or 3 weeks, and what does it do? It immediately rolls over. So might have to set my line instead of the 10-week to something like the 15-week and just see if it does help us a little bit more. I'm going to go straight through all of these to get down into the energy sector so we have a little bit more time on that. Here's the XLE, and what I want to show here is we had the big spike and then we consolidated for 3 days towards the end of the week. I still think there's a big risk premium and that needs to be in there. If the U.S. military is going to move into Saudi Arabia, and they obviously have oceanfront property hanging out in the Gulf, there's some big stuff going on there. I think the oil premium is still ready to rise, so I wouldn't be selling oil short, that's for sure. Looks like it'll be a rocky road though. The oil refiners started to turn back up here, and if I could see this big long sloping red trend line breakout, that would be great, but it's right at the 0 level if it rolls over here again. more caution ensues as it would, mark lower lows, lower highs. So keep watching that one. That's an important area. Going for the oil producers, they kind of drizzled down all week, but still closed up on the week. The next chart is the weekly. PPO got above zero here, but just went flat for the whole week. So want to see a little bit more action there to see if it can stay moving up. Looking at the frac weekly, we broke the downtrend on this PPO, which was nice. We have a longer one that goes on about a year and a half. We'd need to get above that. So if this rolls over again, I would just literally take profits and leave this trade. But we stalled at the 40-week moving average again here, and we did it here. So to start the week, we're right at it, and we ended up the week right at the low of the bar, but still up on the week by about 2%. Okay, West Texas daily, lots to analyze here. So we had this horizontal support and resistance level holding up from 2018. It was kind of the market top at that particular time. And then what happened is as we came over here into the April high, we briefly got above it and failed. That started to mark our trend line now. We've come down. Now we broke above it, got up to that same $64 level, failed, and pull back down. So I think the 64 is the new channel top with one here, and 3 down at the bottom. So we're going to play 51 to 64. And until we break out of that range, obviously that's going to be worth watching. But everything was suggesting that this breakout could move a lot higher. PPO rising above zero, getting bullish, breaking a downtrend line, lots of stuff that, if you want to be bullish oil, these were starting to move. We also have an uptrend line here that if it starts to break, that would be concerning. So we've got two different momentum trades in place here. One, we're breaking out to the top side. The big thing, I think, is as we find out how much oil is being withdrawn from inventory now that the production is offline, we'll get a big clue. And one of the things that was actually helpful was that Saudi had 2 million barrels a day of spare capacity to push back online that they had geared back to kind of stabilize the price with OPEC. So by Saudi pulling back on those barrels and now cranking that back up to get to their commitment, all of a sudden, there's still a drawdown on reserves. The real question is at what rate of change, because it probably won't be weeks to fix that structural damage that happened at the plant there. Okay, looking at the weekly chart, looks very bullish, except that we closed at the bottom of the range and our PPO is still below zero, but we did get a positive cross here. So lots of positive crosses where we closed at the bottom of the bar. So that's really not as bullish as we want to see it. Again, if the full stochastic just rolls over here, I would just take your profits and move out. Okay. Getting on with XOP, this is trying to break out to the top side here. It's above its 50-day moving average. A bounce here and take off to the upside would be pretty bullish. So keep watching that. Momentum is above zero on that sudden spike last week, but again, full stochastic says we didn't go very far. So very difficult trading environment here if it's going to be this choppy. Looking down on natural gas basically pulled back this week, not much more to report there. For the nuclear, this is the utilities that generate the power, and it's back above its 200-day moving average, moving higher. I don't know, there's nothing really to talk about here. Looking at the uranium mining companies, still below their 200-day moving average and rolling over. I got asked the question what I thought of Cameco last Saturday in San Francisco, and I said that dog doesn't hunt or don't hunt, and it like this thing just can't get going, and so we got a downtrend here. It had a weak again, but you could just see this ETF continuing to underperform, and we're still below the 40-week moving average, so hard to get too optimistic. Again, with these commodities, you got to buy them near the lows. Otherwise, you'll end up buying them towards the highs and they reverse on you. What happened here is, look at this big, beautiful bar. So we had an outside bar where we were down here. rallied up, made new 1-month highs. Last week soared again, so higher lows, higher highs, considerably higher lows, considerably higher highs. This week, a full outside bar where we make a higher high, a lower low, and close near the low of the bar. That is an unbelievable reversal. And look at the range. We had a 271 to 259, 12-cent range on something $2.50, so 5% or so. Big range. Anyway, we're trying to hold this uptrend line here. If we just zoom in a little bit, sorry about the zoom in and zoom out. Let's just call it 260 needs to hold. We're at 259, 260. We do not want to see this big upsloping trend line break. Again, I think if it does, that probably tells us that we got longer term issues with China, and that's going to be a bigger issue for the globe. Okay. Looking at copper, look at this bearish outside week that I just showed on that other chart, but just on a simple bar chart. We had broken the downtrend in relative strength. Everything was nice, moving higher, and the only thing we had was a big sell-off. Now the volume was low because I think the selling came in late on Friday, but one of the things we need to watch for is just where this chart wants to go, but we're back below the 10-week moving average, so not comfortable at all. Looking at the copper miners, they're still holding up. They ticked up slightly on Friday, but I think, momentum's still below zero here. We want to get that above. I've put PMO on here just to give you different clues about different momentum indicators. We had broken this downtrending line, but anyway, watch closely. If copper starts to fail again, I think we can walk away from the industrial mining trade. Steel also had an inside week, so after a big, beautiful thrust to new 1-month highs, got above the 10-week moving average. Typically, that's a nice place to get on board. The immediate reversal back below the 10-week suggests something didn't go right. And at one point during the week, the PPO was trying to go higher here, but obviously failed and did not give us a signal cross. From a relative strength perspective, continues to be a downtrend, so that was really disappointing. Okay, let's go to gold. One of the things that happened on gold this week that was nice, and it's easier to see on the daily chart, was we made a lower low, a lower high, opened higher, and closed higher after testing lower. So we came down, touched the 10-week moving average, and bounced off it and went back up. We haven't taken out the prior week's high yet, which would change my tune. But if we can get up through this high, perhaps we're going to start to go higher. So it's something worth watching. The one concern I have is this PPO is quite high. So it seems like a bad place to make an entry so close, but they can make a wave and keep going. So nothing wrong with that. And we do have a relative trend outperformance by gold, so money would move into that because it continues to outperform, especially if it starts to re-outperform again. This is the daily chart. You can see for the last 2 weeks we've just jogged sideways on lower volume, so nobody really showing up to buy it either, but the PPO is getting right down here near zero on a daily chart. If we start to turn up here again, that's a bullish thrust and you'll probably want to be on board. Looking at the bigger picture, just this is a 5-year chart, and what we see here is this uptrend that we had is broken. PPO momentum clearly looks to be waning. The volume momentum is obviously waning. This is pulling down hard. But back in 2016, we saw the same sort of thing. We ground sideways, and then the market ended up going higher before breaking down. I have trouble using this percentage volume oscillator. Doesn't work as well for me. I really need to do more work on it, but I've been putting it on the chart to help see if there's clues there for me. And one of the clues we had around the end of the year was we had really low volumes, and that kind of marked the lows in the volume and kind of marked the base being built here before we started to accelerate out of it. Okay, GLD. One of the things, so what we can't do with gold is we can't get a scooter ranking, but GLD right now is still 97%. It's one of the top performing ETFs out there. So that is very bullish, and again, our PPO wave is pretty high, so that I have trouble adding to it up here, but again, you can see in 2016 that wasn't that bad an idea, and it had 3 or 4 weeks where it just shot straight up. So maybe we do need a higher high in price and a lower high in the momentum indicator before this trade is done. So at this point, because it's bouncing and trying to get above last week's high, I think it's setting up to try and be bullish. The gold miners, they actually got right back to the prior week's high. They made a higher low and closed at the top of the bar. But what we see down here is PPO is rolled over and just barely stayed positive. So this last number would go negative, indicating that the gap between the two is now reversed. Anyway, between the signal line and the actual PPO line. So when this reverses, unless we have a big move this week, this will probably kick off a reversal signal. But if we can get back above the 10-week here, which we closed above it, if we can do that again, that would be a pretty important zone to watch for. So the 10-week moving average is at 28.40 and we closed at 28.69. So that's pretty bullish. And again, that index was up 7% this week, so that was a big move. Not a whole bunch here. Let's go to silver. On silver, we had a major support and resistance layer that we tried to get through and pulled back, and then silver had an inside this week. It wasn't quite as bullish as our friends over on the gold side, but we still have the uptrend pretty well defined here on silver. So it's again, all of these charts could make another leg higher right here, right now. There's no negative divergence showing up on the weekly charts. Okay, on a daily basis here, we've got PPO waning, coming down. Again, any sort of a turn up here would be helpful, and we'd like to watch the silver mining stocks for that sort of thing. Here is the chart of the silver miners, and they bounced off last week's low, rallied up, closed right at the high of the bar. So there is some interest there. I think we might go higher on these precious metals next week. Again, if the whole market's going to roll over and move back into gold in period of safety, that could probably be the trade. So we'll watch that. I would want to see the Japanese yen cooperate with that trade. Lumber had another higher close this week, so that was good. Higher highs, higher lows, higher close. PPO moving above zero for the first time. The wood ETF that tracks the lumber companies rolled over a little bit this week, just had a little bit of a down week. So we'll keep watching, but we were watching for a breakout from this bearish wedge, and that happened not in the past 5 days, but the previous week. Okay, so here's that breakout and pullback. So if this is going to be a failed breakout like every one of the other ones out there, again, the rhythm was all set up for all of these commodities to start to turn higher, and they all seem to be failing, so that's a problem. This downtrend line, nice that it finally broke. If it's going to give us this wave where it just comes up and fails again, that'll be quite unfortunate. But again, the fact that it's doing it across the spectrum tells me that might be what's next. The car companies all had trouble this week. GM's got the walkout. Here's Tesla. And one of the things is it's right at this horizontal support and resistance layer. So for people who want to be short Tesla, at least it gives you something to shoot against. People who want to be long Tesla, you're above the 10-week moving average. If it fails here, you just let somebody else own it. If it can bounce out of here and head higher, bullish. But it just seems to me like the autos are still under pressure, and I was thinking if the global economy was going to pick back up, we'd see the autos turn. That all stalled this week, so just keep that in mind. I want to quickly show you the French chart because it's a little bit more bullish. It broke out to new highs, closed right at the top of the stack here, kind of like the Canadian chart, so that was good to see. PPO hasn't broken out yet, so it hasn't confirmed. So we have lower highs, lower lows. Want to just keep watching that. And then to go with that chart to watch on the opposite side, we got the Shanghai Composite, and again, failing kind of right at this horizontal support and resistance layer with a big outside week. If this rolls over, I would be, much more cautious about the overall market here. I think it was a good clue that things were improving, and then all of a sudden they've fallen apart again. Hang Seng, you can clearly see that we're below this horizontal support and resistance layer. If it can't hold up, that's going to be a big deal. Getting right near zero on a monthly chart and on the weekly chart for the Hang Seng, rolling over. So again, another way to look in on China and just see if we're going to get trade. Okay, that was an aggressive hour of data. Again, I realize I'm flip-flopping. The hard part is so is the market. And so as we go with the trend of the market, just stay cautious, keep your stops tight, and try to make money where you can, and then just stand aside if it's going to start to break down. Thanks, everybody. Be cautious and have a good week trading. Thanks. Bye-bye.